Hi everyone, hope you're all doing well, and today we're going to talk about Greg's stock, which brought out its preliminary earnings today, and we were going through all these numbers that they brought out. Now for you guys that may be new here, I'm currently a shareholder in Greg's. It is currently my third biggest UK holding, so obviously these earnings mean a lot to me. And generally through this week, it is a busy week on the UK front, so hopefully we see maybe a few deals coming up. I think we've got Greg's coming out this week, National Express, JD Wetherspoons, Team 17, yeah, Feathertree. There's definitely a lot on the UK front going on, so yeah, hopefully we see a couple of drops that might make a buying opportunity, because trying to find some stocks at cheap values at the moment on the UK side of it is a little bit tricky. But anyway, we'll get back onto Greg's. So Greg's is currently a holding that I have. I'm currently up somewhat like 60% on this position right now, and I'm sure some of you guys as well that were buying this stock as well back in March to kind of maybe October time, you guys are up on your position quite a bit as well. Now you guys, if you do want to know when I'm buying and selling companies like Greg's, there's a link to my Patreon in the description. You join through there, you get to know when I'm buying and selling companies like Greg's and other companies as well. There's also Discord, private live streams on there. And if you do want to start buying some shares in Greg's, there's a link to a free trade account, and if you open an account up through that link, you also get a free share as well. But going back onto Greg's, so they did report earnings, and at the moment the stock is currently up 4.5% after reporting these earnings. So clearly the earnings were taken quite positive. In fact, it was a little bit higher. It nearly broke to 52-week highs at one point. And yeah, it was kind of a strange one really, because I went into this Greg's earnings thinking, I was looking at the stock chart a little bit, so let me just get the stock chart up here. And you can see this is a 5-year. You can see the COVID drop where it absolutely sunk down. And it's really strange that this company actually hit the lows in September when it was kind of back operating again, really, at a good capacity. And then since then, when we've had more and more lockdowns, the stock price has actually gone up again. And yeah, we're kind of getting close to like pre-CV levels now, which is kind of crazy. And yeah, when we just look on the, if we go on a 6 months kind of point of view, and if you were buying all the way to September, and that's probably when we got like the vaccine news, I guess that's what really gave it that little nudge up. I mean, the stock's up 100% since then, so it's absolutely crazy. So if you were getting around that time all the way in September, you'd have even done even better than buying right at the peak of COVID, which is, oh, I just said that word and I might get demonetized, but yeah, you might have had some amazing gains. And my kind of feeling going into Greg's earnings, I was like, okay, the stores have been shut for like the last 3 months, and even worse over like the last kind of December. Maybe November wasn't too bad, but the last few months have been awful and it's been shut, and all I can see is horrible earnings coming out. And the stock, maybe because it's been on such a good run, maybe reversing a little bit and giving back some of them gains that it's had. Now, this is why I always say, I always get so many questions about this, is like, okay, earnings are coming up, do I sell before earnings, do I buy before earnings? And I'm like, just leave it, I always say this, the thing is, you want to be a long-term investor, and it's always about time in the market. You want to be in there for as long as you can, and if you're buying great companies, you'll see the rewards. If you try time in the market and you jump in and jump out, you can always get stung, and it's very hard to predict. Because, for example, Greg's, it's at nearly 52-week highs. The stores have been closed for the last few months. You expect a horrible earnings, and I'll be honest with you, I'll tell you straight up right now, in my opinion, the earnings were like 5 out of 10. But what else did we expect? The stores have been shut for so long. But I didn't expect amazing earnings. In my opinion, the earnings weren't amazing. They weren't terrible, don't get me wrong, for what we've, there's some good news out there for the future. But for, obviously we've had basically a lot of the stores and shut for so long, and limited traffic coming in, students not going in and stuff like that, high street being killed off and everything like that. But there weren't too bad things in there. But if you're trying to time the earning side of it, you would have got stung, because you would have gambled that these would have been bad, and then we have the stock going up. It's like going, you might as well go to a casino and go red or black. The main thing is to just buy long companies. Sure, if earnings have one horrible quarter, don't worry, in the long term it will recover it. And that's something I'm going to say right now, because I always get the questions coming up to earnings about like, should I buy more, should I sell? You just think about where the company's going in the next kind of 2-5 years, and you'll do fine. And that's the main thing. Don't try time the market. So I just want to say that about the earnings kind of view, because everything that you would have thought that would happen with Greg's, the opposite happened, didn't it? So, but it's been on a really good run, and I know this channel is kind of known as the Greg Sausage Roll channel, so I have to do this video today. Just letting you know that the views have kind of like dived down the last kind of few days, so if you could smash the like button as well, that'd be absolutely amazing. But we'll get stuck into the actual earnings. Now, I've read this once. I'm going to go through it here. I wanted to highlight a few bits so I didn't miss anything. But if I do miss anything, I'm really sorry. It's always quite hard to go through it live. Like I said, I was wanting to highlight a few things. If anyone knows a good program to like highlight PDFs or something, that would be pretty cool if you could let me know. But here we go. This is the preliminary earnings or results for the 53 weeks ended 2nd of January 2021. 2,000 retail outlets, well positioned for growth. So I guess this is what Greggs was trying to focus on, is like, hey, you know, we know that our company has been killed the last few months, but what we're doing right now is going to be amazing in the future. And that's what I love about Greggs. The management team here are absolutely fantastic. I'm actually going to talk about the management team actually towards the end of the video, and also when I'm thinking about do a bit of an update when I'm actually thinking of selling my Greggs position. So I'll kind of touch that on a little bit at the end of the video, hopefully if I remember. But yeah, I think Greggs was trying to get the point of view is like, look, what we are doing for when the recovery happens in the next 6 months, the numbers will be really good. And I think that's what they're trying to like push forward here. So multi-channel development strategy, delivery and wholesale channels providing alternative routes to Greggs products. Just Eat. Click and collect rolled out across the entire state, and delivery made more than 600 shops. So you can see here at the moment there's a lot of, I have no idea why that email is coming up. When you look at this, the big thing is like, you look, Greggs has 2,000 retail stores. At the moment, it probably won't get to everyone, but Click and Collect and Just Eat at the moment, 600 stores, 600 shops. So that's still got a lot to ramp up at the moment. But when you see how well they're doing on the sales side of it, it'll look pretty good. I'll show you that in a second. But that's something to be really, stand out there. Demonstrating confidence in long-term growth opportunity. 84 new shops opened in 2020, 56 closed, 28 net openings. So we can see here more and more stores going forward in the few years. Shop and supply chain operations adapted, COVID-19. Variety of reach, shop real estate, yeah, that's fine. Investment in supply chain systems. So we'll talk about that in a little bit, because there is a little bit about that in a little bit when we talk about it. Yep, the Greggs pledge launched. So total sales here, 811 million versus 2019, 1 billion, just over 1 billion. So you can see that's kind of what we kind of expected, really. A massive drop in sales, totally fine with that. Not totally fine with it, but we knew it was going to happen because they've been closed for so many months. Like-for-like sales managed 36.2% down on 2019 level. So we knew there was going to be a massive drop off. I think it's actually different from like England to Scotland. I believe actually all of Greggs are like currently shut in Scotland, if someone from Scotland can confirm that. But I believe actually in England, where we are still open, I think actually like a lot of the going to the store and pick it up has been closed in Scotland. So I think that's really hurt them even more in these 3 months. If someone from Scotland can confirm that, because obviously I'm not from Scotland, but that's probably why there's also a little bit of a drop off as well. And we know that Greggs needs to get to 20% to kind of be profitable. Recovery sales second half of the year, yeah, we had a little bit more open, and stores still being open, so that's absolutely fine. Pre-tax loss of 13 million, including government support and job retention relief, where we had 108 million profit. Yep, we expected that, and positive cash position at the end of the year, new 100 million revolving credit facility. So it says positive expected start to 2021. So this is what I was on about Scotland. Shops in Scotland temporarily closed to walk-in customers for the majority of the year to date. So like I say, the part of this company, like the big thing that we always focus on this channel is like, Greggs are going to get to the point where if they have 20% down on sales of 2019, they can still be profitable. But because Scotland are pretty much closed in walk-ins, that's another nail in the coffin, and it wasn't able to achieve it. So obviously you've got to take that into consideration as well. Outside of Scotland, company managed like-for-like sales in the rest of the UK state were down 22.4% year over year. So when you look actually like outside of Scotland, that was actually really good, because the whole aim this year was to get to probably 20% down year over year. So that was only a short miss. So that was actually not terrible from the actual point of view in the end of where Greggs actually achieved this year. Now this is a key point. Delivery sales were particularly strong at 9.6% of total company managed shop sales in the first 10 weeks of 2021. So that's really good. You know, that Just Eat partnership making up 10% of the revenue. Now when we actually get all the stores open back up and everything like that, obviously it'd be interesting to see if it still keeps a 10% revenue coming in, because obviously that might drop down. But that was really good numbers, so that looks really good, because you got to remember that that delivery side of the company wasn't in pre-CV, so that'll be another leg up of the revenue increasing going forward when we get back to normality. We get a quote here saying that it's made a better 2021 given the lockdown conditions. That was from Roger Whiteside. And like I say, you know, I won't go through all this because I don't want to like completely bore you, but you know, go through this yourself, read a couple of these statements. I just kind of want to dig into some of the key points here today, so yeah, make sure you do that. If I scroll down, there is another part here about management. So we continue to plan for the succession for both executive and non-executive directors. Normally under the UK Corporate Governance Code, I would have been expected to step down in 2020, but the board has asked me to remain in place to provide continuity of leadership during a period where we are likely to address CEO succession as Roger Whiteside, 62, approaches his retirement age. We are grateful for Roger for his willingness to be flexible regarding his retirement date to ensure the best possible succession and transition possible. So it is really important to put out there that he is going to be a management change in Greggs in the coming few years. We'll talk about that towards the end of the video. Dividend, no dividend, we kind of expected that as well. They probably need to just sort out that balance sheet a little bit before they do come back to a dividend, but yeah, I expect a dividend at some point in the next few years, but yeah, I'd rather them just strengthen the business, the balance sheet up a little bit. Once here, you know, record break in 2019 until and strong growth in numbers in January and February. You know, this company was doing really well until the CV, and I'm sure it will come back pretty strong going forward. It goes on here to say that they're looking to maybe move away from more office-based locations as they expect them to go down, which is probably a good move. This is what I love about management, they're always on top of sort of things here. It says here current trading and outlook, which is always really important to look into. At the moment it looks okay, to be fair, because what it says here is that like-for-like sales are down to 28% year over year outside of Scotland, and also it says that company managed shop like-for sales in the rest of the UK estate were down 22.4%. Now this is pretty good because realistically, you know, student trade's totally gone, high street trade's totally gone. So yeah, to be able to have this sort of outlook here at the moment is pretty good going. Like, I think when you get the student trade coming back as well, high street coming back, I think the numbers for Greggs in the next coming few months will be pretty impressive. So that's all looking pretty good. So I was going to read the whole financial part out, but then I thought, you know what, you guys might get really bored of that. So really quickly, I'm just going to go onto the balance sheet point of view, and you can see here that they have raised a lot of cash, but at the same time they have burnt through a lot of cash here. You know, when you look at the cash and equivalents, that has gone down quite a bit, but obviously they won't burn through as much cash going forward. But yeah, that obviously you can see there has been some damage done to the balance sheet right here. And yeah, overall, my kind of thoughts of it is, like I say, there's a lot of information there. They will, like I say, there's a few things to go through, and you know, I might have missed a couple of things, but kind of don't want to make it too long because obviously it's all information you can get for yourself. But I guess kind of what it leads me on now is what my final thoughts on the situation is and where do I see Greggs going. Now obviously I said about management are going to change, which I think is a big part of this company, which have done fantastic and what is really attracting me to the company. And if that does change, obviously that might change things going forward, so that obviously something is to keep an eye out. Selling wise, I am not near selling at the moment. I still think when you look at one thing that I didn't talk about is how they've improved their logistics side of the company. And I think that's obviously going to help with the company's profit going forward. And also when you put in the Just Eat deal, obviously that's really going to help the company as well. So I think those two things, and when we see a shoot up in revenue due to the high street coming back, students coming back, Greggs should put in some really decent numbers. And the thing is, when that happens, we should see the Greggs share price do very well going forward. So that's something I will try and remember. Like, I think that when the recovery happens, this will give Greggs another leg higher up. Obviously, management change is something that I am considering. So realistically, at the moment, I don't see myself selling Greggs, and I still think that in the next kind of at least 24 months, I probably would not see myself, unless something crazy happens, probably not see myself selling Greggs just yet. But it is one that I am looking at and watching the recovery. And like I say, probably, I mean, it's definitely not going to be sold this year. But I will be keeping an eye on, see how the revenue growth, see how the share price goes, management and everything like that. And it's probably one that I will look back in because the kind of thing with the Greggs is like, how high is this, where's the ceiling at, only based in the UK. Sure, that the logistics side of it's going to help it, absolutely huge. The Just Eat's going to help it, kind of huge. But where I'll be at in probably 12 months time, 24 months time is, okay, Greggs has now recovered, where does it go from here? And that will be my next point where I update where I see Greggs going. But at the moment, I still see myself holding Greggs for at least another 12, 24 months at the moment. So yeah, I think when we do get some revenue back, it will look pretty good. And if these numbers are anything to take by, and it took so positive, I think when we have some normality as well, that'll only help it go up. So that's where I'm at with Greggs anyway. Let me know what you think about the earnings. I think they were, for me, definitely kind of where I expected them to be, really. So I'm happy from that point of view. Probably 5 out of 10. They were never, when you kind of have so much restrictions, they could never put in amazing earnings, you know what I mean? But the news that we had there were positive, at least, and that was good to hear. So hope you enjoyed it anyway, and I'll see you on the next video.